Hey everybody, hey traders, happy Tuesday. A little Pulver Report video update for the week. I'm just going to review all markets this morning. We're sitting here on the SPX at 5191. Quiet day Monday, and Monday was a travel day for me. Come back to the markets this morning, had a big sell-off, so we opened up around 52.17, rallied up a little bit towards 52.25, had a big drop around 65 points today, and the markets kind of come back and fought back to equilibrium on the day. Now, I mentioned this last week. I think this is a really important area to watch for the SPX this week, as well as the SPY. If you take a horizontal line, put it at the low of Thursday last week, and take another one and put it out here at the all-time highs, this is essentially what the market's going to be battling this week. We have CPI data coming out Wednesday. So if I go to forexfactory.com, U.S. news coming out. The anticipation is we will see, so RBNZ held rates overnight to 5.5. Your CPI data year over year expected to tick up a little bit higher from previous 3.2. Forecast is 3.4, so another 0.2% higher year over year. Now, is the market going to be nervous and scared about that? I mean, the Fed seems to be calming the fears of no more rate hikes, but the market's expecting 3 rate cuts this year, and if this data comes in hotter, that might be a justified reason for the market to sell off and contract a little bit, because all of a sudden now the Fed language might be shifting to, well, we're not going to cut like we thought in June, we might not cut at all this year, and if that language changes, that's where we're going to have a little bit of a correction that is very likely. So sitting here at or very near all-time highs with a lot of indecision the last couple of weeks, that Thursday sell-off to me is what kind of put in the range where I'm certainly watching to see if this is the ceiling, this is the floor. Volatility this week is expected with the CPI data Wednesday and the PPI data on Thursday. Let me go to this week so I can get all of it. So let's go this week. There we go. So we have CPI data expected to be slightly higher. If that comes in on your calendars green, where we print actually higher than 3.4, that's probably not a great thing for the market to be digesting. We also have Bank of Canada rate decision at 9:45. They're expected to keep rates on hold at 5%. I wouldn't be surprised if central banks prior to the Fed in June start to cut rates like the Swiss National Bank did. So Bank of Canada is certainly one of those banks we could see a rate cut. If it's forecasted for 5 and they come in at 4.75, 4.5, look out for that in the CAD. ECB is on Thursday morning. ECB trying to hold on the forecast. From what I can see here, 4.5% again. Do they have a surprise cut at 4.25 to 4%? We'll find out. So, big data to follow. Wednesday, CPI. Thursday, PPI for the U.S. as well. And we will see if these continue to show that inflation is sticky. Inflation is kind of creeping back up a little bit higher on several fronts, and how the market reacts to that. So, again, follow price action. That's the most important thing. And here we are trading at 51.90. That big sell-off candle from last week, to me, puts in the floor. If the bears can break below that, then our next move would, I would assume, be down into the low 5,000s. So this is the big NVIDIA gap that we saw back in February. I think that was February, March. Let me find out. That was, end of February. So if we break through, 51.47 on the SPX, we have room to drop to 50.38, all the way down to fill the gap at 5,000. If you want to compare that to the SPY, if this is the instrument you trade more, there's my ceiling, there's my floor, and your NVIDIA gap is 502, just under 503 actually, all the way down to 498. So if the floor breaks, plenty of downside corrections. I just have a fib drawn. I'll drag this all the way up here to the top for the all-time highs. And if all we did was look at a shallow pullback level, 23% fib from this October low, that would pull us back towards 498. That's the 23%, which is right at the bottom of that NVIDIA gap. I think that's pretty interesting. 30%, 38%, same type of thing. So to me, a correction would be, I think, healthy for this bull market. It would be really healthy, actually. So I would like to see the floor break a little bit. I am positioned for that, and I think that's fine. But with the news kind of being digested, maybe the market finds a way to just stay very noisy this week. So that is what I'm watching the closest as far as price action goes on the SPY, is a little ceiling, little floor, watching price accordingly. If we go back to SPX really quickly, trading at 51.84. I did put in a broken wing butterfly today that's doing pretty well as long as price stays below. Let me bring this over here. I'll just take a screenshot of it actually if I can. So bring this up, take a screenshot. There we go. See if it pops up. There we go. So this is a trade that I'm in right now. I collected about 80 cents this morning on the trade. Right now it's trading for about 25 to 30 cents. So most of the profit is coming in. Price is all the way down here to 51.83. And what I need is, we're trading at 51.83. This was credit all the way up here towards 5,200. I had a pin price at 52.05 just in case my position was threatened today. And the bears seem to be holding that level pretty nicely. So I think I will be collecting and keeping that full profit today, which is nice. This is what it looked like intraday. So I let the sell-off happen. Just kind of check everything, see where the market wants to settle in for the next couple of hours. Chart alarm is set at 5,200, 52.05. That's exactly my pin price. And so I can make the decision necessary. But hopefully we'll see if the afternoon is just calm after a big high, big low, and we're just treading water here for the next couple of hours to go into the close. So that's just all I did for today. I rolled a couple of calls, checking on positions. It really is going to be a price action based week. I do think that the bears, have the evidence if we see inflation data higher than expected this week. That would be, again, Wednesday's data. If the market doesn't like what it reads here, if this comes in 3.5, 3.6 above expectations, which is again higher than the previous print, I do think the bears would possibly grab the upper hand with a bit more selling and expect the Fed language to change. One thing we could look at right now as well is the CME Fed Watch tool and see what the forecast is, because this is likely going to change with some dramatic data this week. So once this comes in here, the forecasted cut for the Fed is expected to be in June of 2024. The market's expecting to see 3 cuts this year, and that could quickly shift. So I want to check and see what the probability is that June continues to be the higher probability rate cut. If it shifts this week, we need to kind of make a timestamp of it today and then come in, check it out after the market close on Wednesday, maybe by Friday, end of the week, and see what we're going to look at here. So I'm just waiting for this to update and see. So I'll let that load up. So that is the SPX. Go to the daily time frame. Here is my high and low. SPY. Here's my high and low. Watching that price very carefully. Let's go to the Dow Jones. Here's the DIA. We can do the same thing. We're trading here at 387. I took profit on this last week for about $8, so this trade is done. With that big Thursday sell-off, we were sitting here at the lows around 386, so I had all of $7 plus about a week and a day of time premium, so I was able to close that for like $7.75 to $8 profit, which was a nice little chunk there. Again, you can see the floor right at those lows. You can see the ceiling right there on the DIA. You go to the Qs. Same type of thing. You can see these chart alarms are kind of acting like my ceiling and floor. So this is my ceiling. This is my floor. If those chart alarms go off, I want to see what's next. Also, what makes this pretty vulnerable to the downside is if we break this floor, this is going to break this type of structure. Yep, I was going to say, I thought I had some chart alarms on here. Looking to break that structure, I can take this one away. That's a little too aggressive. So we start to break that structure in this area here. So if that breaks, then yeah, just look left. Here's my fib from October low right there all the way up to the all-time high. And just look left. You've got fibs here at the 424 level. You have a 30%. That's a typical Gann retracement number, 417. You have the all-time highs at the 38% level around 408. So the bears could have a very quick, let's say, run to the downside until the bulls kind of wake up and snap out of it and see if there's interest to buy back at these levels. It is going to be something that we want to watch, and I think price actions are a big determining factor. If you go to the VIX, we're a little bit elevated off the lows. VIX was as low as 1250, 1260 in the last couple weeks. We spiked up to 1581. That's a pretty decent move up. Not really threatening, not the big fear gaze everyone thinks it is, but that's a 35% difference off the lows. And selling's been a little bit better as an options premium collector. it's been nice. We've also been able to go a little bit more outside the expected moves, and you're getting some more bang for your buck for those, 25 deltas, 15 deltas, which or some positions I like to trade day to day if I can. Let's talk some currencies and indexes. Here's the dollar index. I still think the dollar index is very difficult to read right now, so I'm just letting some robots take care of things right at the moment. If I go into some other currency pairs, I saw that the Swiss yesterday was one of the weakest currencies, so let's go currency strength .com. Load that up, and we'll check and see how things are looking today. Let's go Aussie CAD. I'm still bullish on Aussie CAD, and that's working out very nicely. So trying to take this higher towards, let's say 90. Well, this is the range that I'm looking at in the higher time frame. If I'm looking at a head and shoulders here, I'd like to see if this is my neckline, left shoulder, head to neckline, right shoulder, and looking to see if the Aussie CAD continues up towards 9,500, which is where my profit levels are sitting. So I'm long on Aussie CAD. Aussie Swiss continue to stay long on this one. We are poking some new highs. A little indecision today, but a big push yesterday, which was nice to see. Aussie Yen continues to poke new highs. Yen stays weaker. Aussie New Zealand. Had somebody reach out to me this morning asking if I'm going to close out my positions for profit. I'm in around 108.64 as a buyer, so I'm up about 70 pips right now. I'm not closing this position out. The only way that I would close this out at the moment would be if this is my low, this is my high. This is a nice little pre-summer push to the upside. I do think that if we're going to pull back, I think this level here where this wedge started around 1.11, that's probably a target one for me, and then the rest I'm going to hang on to the upside around 113.50 to 11400. So I'm fairly bullish on this at the moment. I think this is a nice wedge fake out. I don't see this necessarily being a big reversal all the way back down to the lows again, 1.3 or 1.03 or lower. So I think after this swing, if we have a little bit of a pause and a push, target one for me is 111. Target two is 114 or higher. So I'm just going to hold on the Aussie New Zealand a little bit longer. Aussie dollar crosses are really choppy. Never mind those right now. CAD Swiss continuing to buy dips and looking for upside. CAD yen, Swiss yen. Swiss yen I'm still bearish. I've got a 106 or 169 sell trade that's currently still up about 115 pips. Stop is at break even. So I can't lose on the trade. I certainly hope it goes down and cooperates more. But it's a yen cross and it's a Swiss cross. I'm definitely trading weakness on the Swiss pairs. But I understand that against the yen, the yen might still carve out some additional weakness, and this is volatile, so I might get stopped out at break even. And if that's the case, that's fine, because I'll hold all the other positions against the Swiss, enjoy some positive swap, and not worry about the yen crosses. Euro Aussie, let's watch out for this one. Okay, we get some risk off trading. Risk off trading is actually going to make this go up. Risk on trading is going to make this go down. Okay, now risk on, we could very quickly shift into some risk off trades this week, which makes this a potential fake out. So be careful on the Euro Aussie. This one might be a little bit easier to read after this week. Here's what I'll say. If we snap back into this yellow box, we're probably trading this back up to range highs. It would make sense that if the market doesn't like the CPI data this week and the market starts to sell off as a whole, that likely would yield a stronger euro. But we do have ECB on Thursday. So I'm watching this price. I don't think this is worth taking a trade on right now to guess. But like I said, if we come back in the yellow box, I would look for that to rally. Stop loss below looks pretty clean to me. If we were to go, let's say, firm break, a little bit of a pause, and then continue lower, or firm break, snap back to the yellow and rejection and go lower, I would just trade that breakout range. So measure this high to low, project that high to low there. If we start to the upside, we could actually project the breakout there. So there is a trade happening soon. I just don't think it's ready yet, but it's a currency pair that it's boxed in for a reason. I'm looking to see if we can trade a breakout. Euro CAD. This one I'm CAD Swiss long. This is interesting. So I'm CAD Swiss long and also Euro CAD. Look at how this thing is snapped back. So I don't really know what to make of that outside of I'm just going to stick with a CAD Swiss. That's a lot of volatility on the Euro CAD that I don't think is correlating correctly. So I'm going to stick CAD Swiss long, stay out of Euro CAD for right now. Euro Swiss continue to stay long. We expect some pullbacks, which is fine. Euro Pound still broken, still gross. I don't like it. I'd like to see a clean break above 8,600. I'd get long towards 87 and change, but that's nothing right now. Euro Yen, stay out of this one. Sellers have to break the trend line. Hasn't happened yet. We're probably just going to keep poking new highs on a carry trade. Euro New Zealand, pullback expected. We took some profit on the Euro New Zealand and the Pound New Zealand within the last week or so in the flex room. So good decision there. And then we'll wait and see what's next. Risk off trading. Again, if we have risk off trading, we can look for another U-turn and see if this wants to head higher. Okay. If it heads higher, this risk off flows, targeting 182, 184. If somehow we have risk appetite and this comes all the way back down into this low or this low, I'm just going to follow it on a shorter term time frame, but I have nothing on Euro New Zealand right now. Euro dollar, probably the crappiest of dollar pairs because the DXY is so indecisive and it's mostly weighted by Euro, so I don't like the trade. Here is the Pound Aussie. I canceled, this was last week in the flex room, I canceled our pending buy. I canceled that because if this is going to be a swing, okay, and we go from low, high, pull back into this zone, I want to see a nice clean area, and I'll draw this out. So if I see this here where we just connect a trend line, let this thing settle in, I'm just going to look for a simple indicator system to give me some bullishness. Let it break the trend line, stop loss below, then look and see if we can push back up. So I'm not trying to catch this. I'm not trying to guess where the fib swing is going to stop. I'm just waiting, and I'll wait for clean confirmation on Pound Aussie. Pound Canadian, I was favoring a sell trade in this one, but again, CAD's not cooperating. Stay out of this one right at the moment. Pound Swiss, still looking to buy dips and hold. Pound Yen, leave it alone. I think it's garbage. Pound New Zealand also pulling back. We took some profits. We got into this 204, 204.50 level. Ran all the way up towards 211, 212. A nice little 600 to 700 pip profit. Now, staring at this one, same type of thing. Risk off trading should favor the Pound New Zealand heading higher, should favor the Euro New Zealand heading higher. I'm going to look for confirmation to see if I can get green, bullishness, or my trend indicators turn up again, and look to see if that trade wants to retest the highs around 2.14 or almost 2.15. That's what I'm looking for right now. If we see very quickly this heads right back down to this level, it could be a little trickier, but it could be in like a broadening pattern where this might have a sell-off all the way back down to the bottom. And I don't know if that would be because the RBNZ held rates at 5.5, or if the Bank of England cuts rates and all of a sudden we have a slight swap differential to the downside. This would be one to certainly wait for a bit more confirmation because it has the tendency to be, big mover when it wants to be. We can see sometimes this can move 150 to 200 pips a day. So, pound dollar, really choppy. New Zealand CAD staying long, and we've been pretty firm on this one as far as just bullishness. I have at least. I was looking to buy back in around 8,000 in case I got the opportunity. If that doesn't get filled at 8,000, then I'm looking to see if this heads up here, pauses, and then starts to go, and maybe the catch-up starts to happen where the New Zealand outshines the CAD. We get up to 87, 8,800. That's my profit levels at the moment. I'm building this position based on what I think is a low to a high. So here's my low, here's my high, and then this is my rounded, higher low, forming a bit of a head and shoulders pattern here. So if we have this kind of neckline, left shoulder, head to neckline, if it gets back up into that neckline area and breaks and goes higher, measure that move, measure the swing, plot that symmetry up towards 9,000, and I would stick with the New Zealand CAD long. BOC might be a bank that starts to cut rates. They might be, I could see Bank of Canada or the ECB cutting rates prior to the Fed in June. New Zealand Swiss starting to break out of these highs. This one has a lot of upside. I'm targeting 6,000 on this trade, so another 540 pips or so. New Zealand Yen probably carving out some highs, or just there's a big trend line here that hasn't been broken. So if you continue to buy trend line support, that's going pretty well. Target the highs, see if the bulls can soar some points. Nothing crazy complicated there. New Zealand dollar. I was looking for a deployment here where we would stay bearish and continue to see some dollar strength. CPI data might lead to that as well, but if you're looking at the dollar index like I am, I don't like it, and I'm just going to continue to run some full automation there and not really worry about it too much. Let the trade size take care of it. Dollar CAD, extremely choppy. We actually had a good session last week in my six-figure ultimate class showing that just a slight uptrend has actually paid out really, really well. It's still a very choppy currency pair when you just look at the price. I still like selling high. I still like buying low, but considering where we are seasonality-wise, with the BOC coming up and the inflation data, some risk-off, risk-on flows, we'll see what happens. But I'm just looking to see if I want to trade, to this high. I'd like to see a bull flag. If I want to trade to this low, I'd like to see a bear flag. So structure-wise, something needs to happen on the dollar CAD in order for me to take a positional trade or directional trade. We're really right in the middle of this huge range. So that is why I don't love it at the moment. And then dollar Swiss. We're getting some overbought conditions on the higher time frame. I'm looking to see if this will just continue to stretch a little bit higher towards 92. If we have a pullback first, I will welcome that pullback. I'll buy some more positions, take it up towards 92. This is going to be a big take profit one for me around 92. If we continue to push higher, I'll take profit. If it pulls back, I'll add some more. Still look to take profit at 92. Still long on that pair. And then dollar yen, we're at 151.66. Look at how different this pair looks. We've had lots and lots of big movements and volatility, and look at it right now. Just absolutely nothing. So one that you might want to keep an eye out for, just because it's not going to be like this forever, right? We get a breakout one way or the other on dollar CAD or dollar yen, and we'll probably have, several hundred pips to go off of. It's just, are we breaking lower and sliding all the way down to this trend line? We breaking above 152 and penetrating all those stop losses that have been at those highs where the BOJ was intervening, and then all of a sudden we drift into no man's land at 155 or 160. I don't know, but this is probably one of my pairs on the watch list, but no actionable trades at the moment. So covers quite a bit. Dollar, I can take a quick glance at oil, gold, silver. We have oil that showed some nice bullishness. I'm still bullish on this towards probably low 90s. I'd say 90 to 92 up until we had this top last year around 95 or just shy of that. And oil, gold, silver. So I'm still bullish on oil right now. And gold, same thing, still bullish. Gold and silver both looking pretty good on spot prices. Gold all the way up towards 23.64. What a massive run. Trailing stop losses would have been fantastic there. If we have any dips and pullbacks, I'm still liking this. I am a little bit heavier positioned on XAG. And we're trading up here for some fresh highs at 27.88. A little bit more volatile. But the fact that we just started this breakout on silver, I think there's more. I think there's outperformance on silver, which gets us up into 35. First stop here for me is 29.75 or $30. Let's put a round number to it. But symmetry, I've got measured all the way to 35. So I'm in right now with some positions on SLV, and I'm taking this all the way up. I've got my calls rolled out to $30, and we're trading at 25.49. So I'm trying to give it some time to continue to push. My measure move up here is around 32.80. So gold and silver to me look pretty good. Continue to stay bullish if you can. I'm selling out of the money credit spreads, and I think those are pretty good. So anyway, I'll wrap it up there for an all markets update. Thanks for watching. And I will be a little infrequent this week because I'm traveling. But, still some good trades and still things to monitor and watch. And that's always the plan is, I'm always trading. So, all right, everybody, take care. Have a good week. And we'll chat soon. Thanks. Bye.